I've been in banking for 30 years. My background is a commercial lender. So it's fairly easy for me to make the leap with the applicant for credit. If they say, well, I've been working as the foreman of this plant or this business, and I'd like to take a chance to do it on my own, the business owner is going to provide some seller financing. I've got all the money I've ever saved. I got some skin in the game, so I can go with that. But if a doctor who's had a series of bad months in his practice says he wants to go out and start a hot dog stand or something, or open up a furniture store, I have a lot of problem with that linear aspect of why this makes sense. What in his background would make him a good furniture seller or a hot dog fellow? So I would say that that's the aspect of when you bring a business plan in front of me, I'm thinking to myself, is there any place in this city, state, country, or world where this concept has ever happened before? Or is this the first time the world's ever heard of it, and we have a pioneer who's going to may or may not get filled with arrows, may or may not get fabulously wealthy? But it's the never mistake entrepreneurship with pure invention, with pure, you've got to come up with something that nobody's ever seen before. Because that's, I think that's cutting the realm of entrepreneurship short. And there have been some very successful entrepreneurs, but if you think about Groupon and Facebook recently and so forth, is there anything wildly new about what they've created in terms of how, no, they're working through a network, they're working through an infrastructure which exists, but they did take some existing concepts and components and assemble them in such a fashion which we've barely not seen before. And they really focused on something also, I tell you maybe my fourth point. It's fun to think about a business that you can appeal to that has a potential for millions of customers. People who have millions of customers tend to generate more wealth and success for themselves than people who have 10 or 20 customers. But I wouldn't tell you that don't cut yourself short if your heart is really committed to a business plan that has a limited scope, wider margins, maybe more of an affluent type of clientele. But I think my fifth point would be, in the earlier years of the business plan, I had no idea why these people were putting these business plans together. I would have to ask myself, and I would ask you to ask the same question, kind of convince us what the point is. Now, for prize money, I get it. Like, if the exercise is to earn prize money, wonderful. If it's to earn a grade, good. I mean, that's, but the business plans, I think you saw here that Hero just mentioned that I asked Professor Welsh to start tracking over the years. I think they were actually there because they were going to use that time to do a business and plan for it. They can actually become something. So as I was voting on their behalf, I said, wow, I think it's going to work. Let's keep us posted in the future years as how it's gone. So I'm very, very pleased that some of those have really gotten some traction and really taken hold. By the way, just in terms of my own background, I suppose that what kind of drew me to entrepreneurship, and I can't tell you that banking as it is in this country is a terribly entrepreneurial experience. In fact, when I started in 1980 in banking, there were 14,000 banks. In the United States, there are now 7,600, and there's likely to be 5,000 or less in after this current wave of bank consolidation and failures is taking place. Kind of a cyclical business. But to give you some perspective, I did some looking recently, and I found that there are only 700 banks headquartered in all of France. So if we're kind of becoming an older, kind of former imperial type of nation, we're probably heading towards fewer entrepreneurial banks in our country. I think there are 21 headquartered in Canada. So just to give you perspective, it's not essential that banks be driven and created by entrepreneurs. Certainly in their history, every one of them was, but as time evolves, you can find that they are not necessarily the right place to spend a lot of time entrepreneurial. But I had this kind of problem with working for people. I always hated it. So if you hate it, you still want to achieve something or create some value, or frankly, if you can do this right, you can get paid pretty well too. But if you can do that, then it's wonderful. what's missing, again, this will be my next point, what I've seen missing consistently is dealing with the whole issue of capital and scale and scope. And let's say that, you know, there's another kind of thought I'll leave you with. Good marketing always exposes bad processes, bad infrastructure, bad operations. If you have a really good marketing function that you're running, or you have somebody running it for you, they bring all kinds of customers and prospects to your door, and you don't serve them well, or the rest of your design is not working. You've created far more enemies than you wished you would never have had a good marketing function. So I would tell you that the design of your business plan needs to be very comprehensive with how it deals with your success. What happens if, what's been really lacking is in the financial section, and by the way, in 30 years of banking, I've never seen a bad pro forma. Never seen somebody say, well, we're going to go like this for a while, then poof, drop off and go bankrupt. They're always ever open, ever upward, ever outward. But what's really missing, and this would be fun if you guys found it into your business plan, when you're doing those pro formas on the income statement, right underneath them, try running pro formas of balance sheets, which tells me you've really understood your financial aspect. You really understand that you're going to have to finance your own growth. And it's either going to be through cash, equity, trade, credit. You're going to be a cash company, which only takes in cash for your hot dogs or something. So if you show me your balance sheet underneath your intervals of income statement, I'll understand that you understand that you're going to know how to finance this, that you've got your arms around it. I've seen in the assumptions for the financials that folks believe they'll just go out and get bank financing for that part. Oh yeah, we're gonna have some cash flow issues, so we'll just go to the bank and we'll go get some financing. That'll be just fine. Well, that's not always fine, because there's, you can see what's happened with banks that tighten up their credit standards. There's the issue of collateral to be proposed, or something that they've gotten more sensitive to in recent years. So it's not enough to really just in your business plan, if this is feasible and you're really going to try and pursue this concept, to just plug in an assumption about bank financing without having done a little research first. You've gone to the SBA, you've talked to an SBA lender or an SBIC, Small Business Investment Corporation. You've done something with your business plan in those 10 weeks or whatever you're putting it together that would, not a commitment, but give you some indication that there's a financing component. And financing components are great, because it leads to my next point of what's missing in many of the business plans. You will all have learned about, and maybe not be completely facile with this, but you'll all have learned about how to measure and calculate internal rates of return, investment rates of return over time. So if I give you $100 today and you give me back $700 in 6 years, you can tell me what that annualized return rate of return is to the investor. It's woefully missing in the plans we've seen in the past, because in many cases, I don't know that they've thought ahead to the point of, well, do we need capital or don't we? Do we need outside capital or do we not? A real important point that I wanted to get across to you is be able to at least let me, sitting out there, know who is the audience for your business plan. I've always looked at a business plan as having a wide audience of constituents. So I use my business plan both as to turn it into a private placement memorandum. I was very happy to share it with future employees. I was really happy if a customer wanted to see it. I was happy if a credit source, a vendor wanted to see it. So know who your audience is, and think about who you're writing your business plan for. If it's for you and your fellow classmates, okay, I get that. But if you're really writing it to convince a prospective investor, if you're going to do what I did and take it and use it as a vehicle to raise capital for your venture, know that these things are near and dear to investors' hearts. What's the rate of return, and how are we going to get out of this? If I give you this check, if my hand's shaking when I write it and I give it to you, I know that if I bought some of your common stock, I can't go out tomorrow and say, geez, I wish I hadn't done that. I'll call my broker and sell it, because it's traded on NASDAQ. When I was raising capital for our bank, I mentioned that we had a range between $7 and $11 million. So it's September 15th of 2000. And we've put an offering period out there for 6 weeks, ending November 1st. So I want to tell you how crazy this was and how bold and nuts entrepreneurs can be, because you're saying to yourself, okay, you've got some organizers, you've got some guys who've put up some money, they bought my vision and it became their vision. Very important that your vision becomes your team's vision, because if it's just you seeing it, it's not enough. If you can see it in your mind's eye and you can describe it, and others start to see it, it becomes theirs, and it's a lot easier to lift this whole venture. But, so we gave ourselves 6 weeks to raise $7 million of capital, from family and friends and from associates of the board, customers. It was kind of, in hindsight, kind of amazing that we went above the upper end of our scale. We actually raised $12 million and gave one back. And that part of that psychology was, we said that this period of sale would take place from September 15th to November 1st, and we weren't going to extend it 1 hour past that. A terrible thing I've seen people do is say, well, we'll extend it, we didn't make it. So it was very important to convince people that this ship is going. If you're not in, that's fine, we'll move on to the next prospective investor. But the guy who wants at least usually does better in any negotiation. So if you want the investor less than they want to get in your investment, then you'll do just fine. If you really desperately think, God, I gotta get this guy, or we're gonna never get this thing sold, you're not gonna get there, because investors, if you're going to ask them to invest in your venture, anybody outside of you and your associates who have put up some money for this, they have an uncanny ability to sense fear and lack of confidence in you. Like if there's one molecule that resonates, like, I'm not sure about this. They're smart guys, they're smart women, they're smart people. Oftentimes they have filtering systems, they have attorneys, they have accountants who look at things. So unless you have the kind of confidence that can take on that very X-ray vision that successful entrepreneurs have for future entrepreneurs, I'd say go back and keep working until you're really going to be successful and confident, and be able to present your case such that you're not going to trigger their alarm for this doesn't work, because the guy doesn't know the answer to my question, didn't anticipate my questions, probably isn't really sure if it's going to happen or not, hasn't shown me what the exit strategy is, hasn't shown me where a business like this has been sold. In our case, it was fairly easy. When we sold our bank, and fast forward to 4 years ago, January of 2007, we've been in business for 6 years. The book value of the bank had grown through retained earnings and some subsequent capital sales to $20 million from its original 11. And we sold that bank for $47 million in cash. So, wow. 20, 47, the premium was 27. We divided that among 230 shareholders. I had my little sliver. My recommendation to you in my world was, own a little bit of a lot, unless you want to own a lot of a little. I owned about maybe 5% of that venture, but I was really happy with that, because 5% was a lot more than I owned when I was working as a bank employee for some other guy. So ownership and equity was a wonderful reward for all of that kind of planning and execution which took place. So that's the upside. But again, we could easily show on the front end, when we wrote this business plan, what do banks sell for when they sell? What kind of range of price can we expect? What kind of buyers can we expect? Guess what? It was bigger banks. Bigger bank bought our bank. And they were nice enough to offer me a position in which I stayed with for a couple years afterwards. So, but think about that. When you're writing your business plan, say, how do we get out of this? If we get it started, there's two basic outs. Well, actually,